Red Sea diversions, I should say, are impacting energy markets, and despite U.S. and allied attacks on Houthi rebels, experts predicting a prolonged crisis and potential cargo container shortages. I want to talk more about this with Dan Yergin, Vice Chair and S&P Global. Good morning to you.
Good morning.
It's nice to see you.
Thank you.
On day 3, This is our final day here. What are you hearing? What are you thinking about as you've been discussing this issue with so many geopolitical leaders here?
Well, I think it is a disruption. The supply going through the Red Sea had doubled because of the sanctions on Russian oil. So you had Russian oil going to Asia and Middle East oil going to Europe. Now the numbers are way down, and some people have announced that they're not shipping oil through the Red Sea, but actually a lot more are not shipping oil through the Red Sea.
And so what do you think the implications are for the price today, and how quickly or not do you think this is resolved?
Well, so far what is really striking is it hasn't had much impact on the price. That's the most striking thing, and I think there are really two reasons for it. One is because of the buildup of supply from the United States, and it's really a geopolitical rebalancing. And the other, the oil market is oversupplied right now. So it's just a market you would expect there'd be a geopolitical premium in the price. So far, we haven't seen it.
Oversupplied because economies have not rebounded to the extent expected?
No, it's just a remarkable thing about, call it the North American advantage between Canada and the United States have added 1.5 million barrels of new supply to the world market.
And so,
and by the way, the U.S. is by far the world's largest oil producer today.
Because of the price.
So, but
right? Price and entrepreneurial energy.
Yeah.
To the extent that everybody's trying to keep this at bay from escalating, do you think that this can remain this way?
Well, I think it's a high degree of contingency. It is a proxy war that's going on, and the Houthis have a lot. They can keep shooting. So, and of course we see what's happening in Syria and Iraq as well. So I think that the risks. There is a geopolitical risk premium, even if it isn't in the oil price.
But then the question is, why is that the case? Is there something missing here?
Well, I think it's because the supply, and I think the psychology of the oil market has changed because the U.S. is by far the world's largest oil producer now.
Hey, Dan, would you ever venture a guess for peak oil within 100 years? Can you narrow it?
Somewhere within 100 years, absolutely.
But you wouldn't try to get in?
No, I think this is a game where people say, is it going to be 2029 or 2031?
One guy finally died.
Yeah, but what we can see is oil demand is continuing to increase. Last year it increased over 2 million barrels a day.
So is it limitless or not? Could it be really another 100 years for
No, I think, I think probably the most reasonable position right now is sometime in the early mid-2030s is when we would see peak demand, I think, based upon what we know today.
I don't mean peak demand. I mean when we are at a point where it's going to be declining, where
we've used all the oil up.
I think it will be demand that will affect it before its physical supply.
What is your sense? Here in Davos, we talk a lot about climate change. We talk a lot about EVs and electrification and solar and the like. And we've talked this year specifically about this pushback that we're seeing politically in the United States and other places. Are you seeing a shift in that? And also the issue around consumer demand for EVs, for example, doesn't seem to be there. Is that a function of price? Is it a function of products not being good enough? Is it a function of infrastructure?
Well, I think Europe, it's 26% of new cars. China's 36%. U.S., it's about 10%. I think something's very interesting I've been hearing in the last few weeks is the politicization of EVs, that it's a red state, blue state, it's a Democrat, Republican.
And you think that's a U.S. specific thing?
I think it's U.S. But I think the other issue that's there is the amount of minerals that will be needed. And another thing that's been on the agenda here, which is a kind of awakening up, is that energy transition is going to a lot of minerals. An electric car has 2.5 times more copper than a conventional car.
And so stuff for the batteries too.
Yeah.
And so what do you think that means in terms of the U.S. being one of the largest markets, if not the largest market in the world? You would think for cars right this. I mean, maybe China is technically bigger.
It's bigger
in terms of how quickly things get quote unquote electrified.
Well, I think it's going to be slower and bumpier. We don't have the charging infrastructure for it. You saw 3,000 auto dealers, 3,000 wrote to the White House to Biden saying, please push down the brakes on EVs. So there is definitely a pushback there.
And that's not happening from Chinese automakers, for example.
The Chinese, the government, the incentives are there, and they're going to move there. And, of course, China is now the world's largest automobile exporter.
Do Europe and China have better infrastructure systems? Because I think, at least when I think about it, one of the reasons I get a little concerned is I go places where there aren't a lot of charging systems.
Well, I think it is. I mean, Europe, it's more condensed. In China, it's just a huge build-out because that is totally driven from the top.
Yeah.
Right.
We have Ben coming on in a second from Semaphore. Andrew, and Becky, we have alluded to this many times, but this is in print here. The World Economic Forum in Davos is the world's greatest machine for manufacturing conventional wisdom, and notoriously a place where the top-line conventional wisdom is invariably wrong. And we've said that every year. Yep. And what are the three biggest? DEI, ESG, and climate change. So what's right in those three? What do you think, Dan?
You're asking me?
Well, no, I'm not asking anyone. I'm really not asking anyone.
Yeah, it's AI. It's AI.
Yeah, okay.
AI and okay. And so next year we're going to say AI is a big dud? Is that what's going to happen?
Probably. I think it has legs.
You think it's got legs?
More legs than crypto.
Dan Yergin, thank you.
More legs than crypto.
Wow. You're talking to a Bitcoin bull over here. So, okay.